Yo, what's the word, y'all? Quick little video I'm about to record. So basically to give y'all a brief rundown, I'm not gonna lie, bro. Like, I blew a funnel like 2 weeks ago. I also drained my personal account like 2 weeks ago. So I decided, yo, I gotta go back to the drawing board for real and take a step back because I feel like my trading got a little impulsive and I got a little bored and I was just doing stuff to do stuff. Feel me? So don't be like me. Please don't. But we're gonna get into this FTMO Academy stuff. I was trade that my funder was with FTMO. I had an FTMO funded. Um, Great prop firm, honestly. They've been around for such a long time. It's not one of those prop firms you can like spam like it's a new CC method that just came out. To be honest, just keeping it real. It's definitely for the disciplined traders, the ones who uh take time to master and perfect their craft and stuff like that. Nonetheless, you can still make money. Like anyone can still make money trading, regardless of how you trade. You can still make money, you can still lose money. So, that's what it is for real. Let's just get right into it, honestly, without wasting any time. We're gonna do one lesson real quick because I have some more stuff to do. So I just want to knock this out and get it over with, right? So, introduction to trading. This is the first part of the academy, you can say. Table of contents. Here we have what is trading, what trading involves, investing versus trading, who can become a trader, expected earnings of traders, and where do you start. So let's get into it right away. What is trading? So I'm just gonna run everything down, right? And this is also gonna help me get through it as well. Because if I sit here and read all of this in my head in silence, I'll go insane. I'll lose my mind. I'll blow up. So the word trading can have a fairly broad meaning, but essentially it is the buying and selling of various financial assets to make a profit based on fluctuations in the prices of those assets. You can trade virtually any financial asset that has a financial value, and as a trader, you can then speculate on the rise or fall of that value. At the same time, you may have a myriad. I never heard that word. Sorry. You may have a myriad of financial assets at your disposal. So they gave us three examples here, well, a few examples. Stocks and indices are financial assets. So we have example Alphabet, Google. We have is this the S&P 500? I guess. Then we have Netflix, as these are two stocks. This is an indice. Indice is a group of stocks in together in one stock, if that makes sense. I believe if I explain that the right way. Then you have Forex and commodities. So Forex is foreign exchange, so it's currencies like the dollar versus the dollar. I don't know if that's an actual pair. But let's say this was a Canadian flag. It'd be the dollar versus the Canadian flag. Gold is a commodity, the S&P 500. Again, I think I guess it falls into the commodities category. I'm not sure. Then you have cryptocurrencies. Ew, I just spat. Yeah. Yeah. Then you have cryptocurrencies though. So Bitcoin, is this the Ethereum logo? I think I don't know what this is. I forgot what thing this is. But yeah, what trading involves. Trading is about understanding and integrating several key areas. True mastery requires many hours of hard work. It is a very immersive activity that is a cycle of skill development, mental preparation, and application of acquired knowledge. It also involves analyzing results, looking for room for improvement, and correcting possible mistakes and shortcomings. If you want to become an active trader, it will be a never ending process of learning and improving your skills with one goal, and that is consistency and attitude in preparation in daily routine and ideally, of course, in profitable trades. Right. So, as I just read out here, like it's a never ending cycle of learning and um the biggest thing is being consistent and disciplined, right? Obviously you could trade, you lose money, you'll gain, but ideally you want to be making more than you're losing, right? Now, let's say you lose more trades than you win. That's very possible. Some people have that type of win rate. Let's say maybe a 40% win rate, but the trades that they win, they win big. Well, win big. The trades that they they profit big, and the trades that they lose small. They minimize their losses and maximize their profits. Ideally, that's what you want to be doing when you're trading. So Now, let's get into what investing versus trading is, right? So many people confuse trading with investing, but there are some basic differences. The difference between trading and investing is, among other things, how you make a profit and whether or not you become the owner of the asset. All right. So here we have a little table that they give us to go over the differences. So I'll go over it really quickly. Um Investment horizon. So I guess like the time period that you're gonna be holding the asset or dealing with the asset. When it comes to trading, it's relatively short. Like there's scalp trading, there's day trading, there's intraday. No, there's scalp trading, intraday, swing trading, and then after swing trading, you just get into investing. Scalping is really getting in quick. Scalping could be seconds to minutes. Intraday could be minutes to hours. Swing could be hours to days to weeks, and investing could be weeks to months to years. So that's really it. As you can see, investment horizon for trading is short. For um investing is long. Trading frequency when it comes to trading is high. You're trading frequently. When you're investing, you're not buying and selling constantly every day. Leverage slash margin. I'm pretty sure we're gonna go over what this is further down the line. But in trading, you do have leverage slash margin. Investing, you don't. Long short positions in trading, you do. Investing, you don't. Technical analysis. Anyways, y'all get the gist of this, right? You could take this, yeah, take this table and do whatever you please with it. Now, the investor's goal is to purchase a financial asset at a favorable price with the expectation of its appreciation in the long term. They anticipate that the market price will increase over time, allowing them to profit from the price difference when they sell the asset at a higher price. So ideally, you want to buy low, sell high, right? You always hear that when it comes to investing. It's one of the first things you're going to hear: buy low, sell high. Additionally, investors may earn regular returns from owning the asset itself. For example, shareholders may receive dividends if the company distributes them and can participate in company governance through voting rights associated with their shares. Bondholders, on the other hand, receive regular annual interest payments in the form of coupons. Okay, I'm not sure how bonds work and all that, but I know dividends, like let's say you have like, I don't know, 10 racks in Apple or something. And Apple pays dividends. So on top of your 10 racks, like you get paid out, I don't know how much they would pay, maybe $500 every quarter, maybe. Some stocks pay quarterly, some of them pay monthly, some of them maybe weekly. I'm not sure. It depends on the stock and the company stuff, but those are possibilities. You just got to do your own homework and find out which stock, who does what. You know what I'm saying? Yeah. So traders, on the other hand, seek to make a profit through speculation, usually in the short to medium term, due to their higher volatility, a measure of fluctuations in the price of financial assets. That's what volatility is. Currency pairs and derivatives are suitable for these short-term trades. In these, the trader does not own the asset and can trade in either direction, long or short. Long being your buying, short being your selling, without problems. In a long positions, traders speculate on the asset's value increasing. They aim to enter the position at a low price, buy, and exit at a higher price. Right? So you buy, you enter here, profit if it goes up, and loss if it goes down, and your exit, same point, whatever. And if you sell, you'd enter, let's say at a peak, and if it goes down, you profit. If the price goes up, then you're losing. So when speculating on a decline in the value of an asset short position, they enter the position at the highest possible price, sell, and exit the position at the lowest possible price, right? So when you want to sell, ideally you enter at a high, you take profit at a low, excuse me. When you want to buy, you buy at a low, you take profit at a high. Now, obviously you can't like magically make these highs and lows appear. Like you gotta kind of guess in a way, but that's why you do technical analysis, and we're gonna get into that deeper into the course. Another advantage of these instruments, which is mainly used by retail traders, is the use of leverage. Leverage allows you to open large positions with very little equity thanks to borrowed capital. Borrowed capital thus multiplies asset price movements and increases potential profits. But at the same time, however, it is important to remember that higher potential profits are also associated with higher potential losses. Exactly. That's what most people ignore. That's what most people try to ignore. They want to ignore it. Like, yeah, you can make a whole bunch of money. You can also lose a whole bunch of money. You know what I'm saying? So it's I think it's fair to say it's a zero sum game in a way, because you gotta give something in order to get something back. So you're either giving your profits and taking a loss, or like, you know what I'm saying? You get what I'm trying to say. In the example below, you can see how much money you would need if you were to open a trade of a one lot base unit on the Euro USD currency pair. Without leverage, you would need $100,000. With 100 to 1 leverage, you would only need $1,000. So the exposure, 100, let's just say 100 bands. The capital required would be a single band, leveraged. Non-leveraged, you need it'd be a 1 to 1 ratio. So you need 100 bands to trade Euro USD. Now, who can become a trader? Who can become a trader? Anyone can become a trader. According to FTMO data, traders come from diverse backgrounds, regardless of education, nationality, location, family, wealth, or gender. One of the appealing aspects of markets is their non-discriminatory nature. Outcomes are determined solely by one's attitude and ability. Facts. Most people think that only someone who knows macroeconomics and microeconomics, excels in mathematics, and is great at chess can become a trader. The reality is that you need slightly different qualities and skills to become a successful trader. As we have already mentioned, a willingness to learn new things is essential. The very important qualities of any trader should be perseverance and mental toughness, discipline, humility, and an open mind. Persistence is one of the key qualities of a trader. It is common to have good and bad periods. Even when the results are already consistent and long lasting, you can't trade without losses. And the claim by some trading gurus that their success rate is close to 100% is unrealistic hogwash. I can't lie, bro. There's no way to have a 100% win rate unless you just traded for a certain period of time and then you stop trading, and then you ended up lucky, ending that streak with a 100% win rate, but it won't last forever. Getting used to the fact that as a trader, you will sometimes have to endure a series of 5 or 10 losing trades in a row will not be easy. It will require a very large dose of patience. And I could speak on that personally. Like, oh, hold on. Excuse me. Sorry. Where was I? Yeah, getting used to the fact that as a trader, you'll sometimes have to endure. So, yep, yep, yep. It will require a very large dose of patience, perseverance, and mental toughness. But we, with the help of our performance coaches, will help you through these. Okay, sure. Honestly, yeah, that I wouldn't rely on anyone to build that. I would rely on market experience and trials and tribulations in the market, and also just trying to work on your psychology. So like reading and maybe like watching videos as well and stuff like that. Just to build that on your own. Cause honestly, for the most part, you could teach someone the basics of trading. You could teach someone how to read a chart, how to read a candlestick, how to set stuff up and all that. But in order for them to be profitable, that's something they'll have to figure out on their own. They'll have to go through their own trials and tribulations in order to get to that point. You know what I'm saying? Like after a certain point, you can't teach trading. That's what I'm trying to say. So, continuing on, we must not forget discipline in all its forms. That is why there are so many successful traders among athletes who have been taught discipline from a young age and take it for granted. Personally, bro, discipline was one of the biggest things that I took from playing sports. If I'm keeping it a buck, and I had a conversation with my boy about this the other day. Like, if it wasn't for hooping and stuff like that, I wouldn't be who I am and how I am today. You know what I'm saying? Like, playing basketball has taught me so much stuff, and I didn't realize it back then. I'd only realized it after I stopped hooping. I stopped hooping like 2, maybe 3 years now. It's gonna be 3 years. Yeah, it's gonna be 3 years I stopped hooping for real. And whatever I learned, whatever let's say, how do I word this properly? Whatever non-tangible things I learned from basketball, I feel like they translated right away into my real life. Main example, like discipline. You have to be extremely disciplined as a serious student athlete. So I just automatically brought that over with me into my habits in real life. Now, granted, I did fall like I fell off a little bit because I'm not always in that mode for the same reasons, but it still applies though, you know? So continuing on, you probably know yourself that without a disciplined approach, you cannot become a top expert in any field, and trading is of course no exception. Discipline is certainly not a 100% guarantee of long-term success, but is a prerequisite without which you will never climb out of mediocrity. Facts. Discipline will help you avoid the phase where you constantly change your approach and strategy because you feel like that it's not working. Unfortunately, unfortunately, humility is lacking in many traders who fail to be profitable in the long run, but always look for mistakes in someone else. The results of a forex trader are influenced by a myriad of factors over which he or she cannot have 100% control. Such an environment creates room for error. A good trader must be aware of this and should be able to admit his mistakes to himself and ideally always learn from them. A humble trader doesn't feel that he knows everything, doesn't overestimate his abilities, and is also able to keep his emotions in check. Psychological well-being, sorry, is one of the most important factors leading to success in forex trading, which is why we devote an extensive chapter to it in our course. There you will, of course, also learn about the importance of self-knowledge and self-development, which our psychologists will certainly help you with in the later stages when you're already trading. Curiosity and the willingness to learn new things are then closely related to all of the above indeed. When a trader has enough humility, he or she realizes that success in forex trading requires constant learning, improving one's skills and knowledge. A trader can be persistent enough, but without enthusiasm and interest in the subject, even this persistence quickly fades because if something is done just for the money, it will not work in the long run. And that's facts. Cause I've been at this for like 2 years now, honestly speaking, like, and or just not even trading, but I've been at like when I came out of high school, bro, not many people know this, but like I wanted to get into the clothing brands, so I need a cut. Don't mind my hair, bro. Cut. But not many people know this, but I wanted to get into the clothing brand space. I wanted to have my own brand and everything like that. I was working with my pops from 9 to 9 every day, Monday to Sunday. I'd come home, I'd be on my laptop, and I would just be mocking stuff up. I'd be mocking up clothes, sweaters, t-shirts, pants, sets, whatever. And I would just be stacking my bread to try and get the capital to get into it. But ultimately, like I had such an obsession with it that it didn't bother me to go to sleep at like 1 a.m. after a shift, after coming home from the gym and you know what I'm saying, working on the craft and stuff like that, and then getting up and having to repeat the same thing like every day. I was so obsessed and I wanted it so bad, I didn't care, and it didn't affect me. Like I was just going, I wasn't stopping, you know. But then after a while, it faded. That feeling faded, and like I tried to persevere and push through it, but it just wasn't the same, and I ultimately just stopped trying to design clothes and didn't even launch a brand for real, you know? There's so much more that goes into it as well. But the main point I'm trying to get across right now is like when you want something, when you're so obsessed with it, nothing can stop you from going and chasing after it or getting stuff done. You know what I'm saying? So that's really what it is with any field, anything in life. Like I say this to my peoples in real life as well. Like if you gotta have a certain feeling deep inside. Like if you want it, you'll go and get it. 1000%. You'll go and get it. You'll go and put in the hours that it takes to really go and achieve what you want to achieve. You know what I'm saying? So you just keep that's just something really important to keep in mind moving forward with life in general. Now let's get into expected earnings of traders. Most traders only become interested in education after they have lost their first money in the markets or, in the worst case, lost all their capital in their trading account. This is a valuable and often very expensive lesson that needs to be remembered well. Now, if I take myself personally, I demo traded for at least a year. I'm not gonna lie. Um, I've done so much studying and research and all that stuff before I even put actual money into the live markets that I was able to dodge and overcome certain obstacles faster than others would. But trading is one of those things where you're forever learning. You're going to be learning forever. As long as you trade, you're going to be learning. Markets move, markets shift, markets adapt. You got to adapt, move, and shift the exact same way. You know what I'm saying? So I feel like I stopped trying to adapt and move and shift at a certain point, and that's why I blew my funded. That's why I drained my personal, because I wasn't doing what I had to do for real on my part. So just something to keep in mind. You know what I'm saying? It's better to learn the lessons without donating rather than to donate, then you want to go and, you know what I'm saying? Anyways, most traders lose money in the beginning. That's a hard fact. The 90-90-90 rule states that 90% of traders will lose 90% of their invested capital within 90 days. You may have seen campaigns by various influencers claiming to make thousands of dollars a day from exotic beaches with just a few minutes of work. Dispel these notions immediately and permanently, because having excessively high expectations is a recipe for long-term failure. Facts. That's not a get rich quick scheme, as I was trying to say before. This is something that takes time, and you can scale it with time and experience. A trader who expects immediate and substantial earnings from forex trading will sooner or later experience disappointment and frustration. This isn't to say you should set small, easily achievable goals. Rather, you need to be realistic. And I feel like that's something I have an edge on already. I'm just such a realistic person that, like, I never really got caught up into anything on social media or anything. Like, I see people and their success, but I always know in the back it took them something to get there. Like, you don't know what they've been through. You don't know what they went through. Some of them, maybe got lucky. Some of them maybe got blessed or you got gifted to them. Some of them actually grinded it out. You don't know how people got to where they're at. So I always take social media stuff with a grain of salt. I'm never even on social media for real, if I'm being honest. So, anyways, last section before we have our little lesson test here. We'll do that together as well. Where do you start? If you're like most people, you're probably eager to open your first trade. We'll get to that shortly to satisfy your curiosity. However, before diving into real trading, we recommend starting in a simulated environment to familiarize yourself properly and understand the essentials. Before transitioning to a real trader, oh no, sorry. Before transitioning into real trading, after studying our materials, practice with mock trading on a demo account. FTMO, we offer, yeah. You trade platform, execute trades under real market conditions without risking your money. Observe how markets function. Boom, 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 boom. And then you also learn how to interpret charts, test basic strategies, take your time. Yep. So all in all, um, when you first get into trading, I'd say demo trade unless you have someone, a mentor right there beside you telling you do this, that, and the third. If you're going dolo by yourself, I would definitely say it would be good to demo trade for at least 3 months. Minimum 3 months worth of demo trading just to get a feel and familiarize yourself with the markets and everything like that in general. You know what I'm saying? Now, demo trading is obviously different than live trading because live trading is your actual money. Demo trading is just simulated money, bro. But I feel like personally, I could tell the difference between demo and live trading. Like, there's something that's different about it. I don't know how to explain it, but I could definitely tell. Um, so yeah, you could just you could, bro, honestly, to start demo trading, all you really gotta do, bro, download TradingView, and you could open up a demo account on TradingView directly. You could open up a 10K demo account. You can find a strategy or test out your own strategy, and from there you can gather data, collect data, and determine whether or not you're ready to put actual money in the markets. So, time for our lesson test. Let's see if we actually took anything from this whole 20-minute lesson. Um, yeah, so welcome to your intro to trading. How can financial leverage be characterized? Financial leverage allows large positions to be open with small owned capital due to borrowed capital. This increases potential profits. This is literally the answer, right? Financial leverage increases potential profit without effects. Okay, nope. Has a positive impact on both profits and losses. Achievable stable growth. Okay. You choose one, right? Yeah, it's the first one. Leverage allows small positions to be open with a large owned capital to. Okay, yeah, it's the first answer, bro. They're chatting here. They're just chatting, bro. What is a long position? In a long position, the trader speculates on the stability of the asset's value by buying and holding it regardless of price changes. What? Buying and selling a financial asset with the aim of maximizing profit by buying at the highest possible price. Never do this. Please don't ever do this. Please. In a long position, the trader speculates on the decrease in the value of the asset by selling it at the highest possible price. This is not a long position, this is a short position. But you want to buy low, sell high. So this is the answer for sure. In a long position, the trader speculates on the increase in the value of the asset by buying it at the lower price. So what is the main goal of long-term investors? Purchasing a financial asset at a favorable price, selling it in a short time. And no, this is what trading is. Buying and selling the underlying asset at a favorable price is appreciation in the short term and achieving quick profit from the trade. This is in the trade. This is trading. Direct purchase of a financial asset at a favorable price, its appreciation in the long term and realization of regular returns from owning the asset. Possible answer. Realizing regular returns from holding the asset, selling it in the short term, and achieving profit from quick trades. Trades are mentioned again. Short term is mentioned. This is not what investing is. So the right answer would be this one. What does the 90-90-90 rule 90-90-90 rule say? Yeah, 90-90-90. Anyways, this rule says that after 90 days of trading, you have a 90% chance of a 90% profit from the initial capital. I wish that's what trading was. I would have dumped 10 racks in there. What? If this is really how it played out, man. This rule says that 90 out of 100 traders will lose all their money within 90 days. I mean, kind of. We know it's not the answer, but anyways. This rule says that 90% of traders will lose 90% of their initial capital within 90 days. This is exactly what the 90-90-90 rule is. Whoa, English. I'm not even going to go over this because we know this is the right answer off rip. Now, last question. What is trading? We're aiming for 100% on this test chat. I said chat like I'm streaming. I'm not even streaming. We're aiming for 100% on this little test, YouTube. So let's go. What is trading? It is the buying and selling of various assets regardless of achieving profit based on their price fluctuations. No. What? That's just playing with money. It is the buying and selling of various financial assets to achieve loss based on the price fluctuations of these assets. Why would you want to achieve loss? Why would you want to lose money on purpose? It is the buying and selling of financial assets to achieve profit regardless of the price fluctuations of these assets. Yeah, we want to achieve profit, but I don't know if this part is right. It is the buying and selling of various financial assets to achieve profit based on the price fluctuations. Based, yeah, not regardless, based. Submit. We got 100. Yep, there you go. Come on now. Stop playing with me, gang. Stop playing with me, gang.
He's back!
Anyways, that is it for today's video. Make sure you guys like, comment, and subscribe. I will definitely be doing the whole FTMO Academy on the channel. Like it'll be a whole series and everything. Um, so yeah, that's really it. I hope you guys enjoyed. I hope you guys learned something. I forgot to mention, if you want to run the video back, you can, but make sure you have a pen and a pad out. These are things I know really, so I'm not really writing anything down because it's stuff I've written down 100 million times while I learned, like while when I was learning what trading was. But definitely have a pen and a notebook ready for next video for sure. Um, and yeah, I hope you guys have a blessed evening, a blessed night, a blessed morning, a blessed day. I wish everyone prosperity and much success in whatever it is they're doing, and I'm gonna catch y'all on the next one. We out.